Most people think investing $30 per week can only get you so far, and I used to think the same thing with any small amount. But 3 years of consistency proved me wrong. As a matter of fact, I actually learned something important. It's not just about how much you invest every week. It's about what you invest into and how you grow over time. So in this video, I'm gonna break down how my $30 per week portfolio has evolved, the changes I've made recently, and how that's impacted my dividends, my total return, and my long term. Because this number right here only tells part of the story. If you've been following my channel, you already know that I started my investing journey 6 years ago. And with the first few years, I didn't have much of a strategy. I was investing in stocks with a low share price because having more just made me feel better, stocks that had a high dividend yield, and I was actually investing into growth positions without necessarily knowing that they were growth positions. But looking back, I didn't know what kind of growth I was building, nor if the dividends I were making were actually sustainable. And to be fair, that's pretty normal when you're starting out, especially when you're trying to make any type of growth with a tight budget. But over the past 3 years, I made a decision. Every week, I'll invest $30, and there's no waiting for the right time. That simple habit changed everything. But being consistent about it wasn't enough. Around 2023, I really started looking at my portfolio, and I realized that I was probably holding on to too many positions. Some were very solid dividend growers, but others were high dividend yield with no share price growth, or they were positions that I stopped investing into because I lost faith in them. Realizing all of that, I started cleaning house. I sold off positions that didn't align with what I'm calling my 2-engine test, the 2 engines being share price growth and dividend growth. If both engines weren't running, then I wasn't interested. That changed my mindset from chasing yields to building total return. And yes, in the short term, my portfolio's dividend yield has taken a drop, but that's okay. It's okay because I realized that the yield isn't the sole goal. It's what my portfolio can grow into over time. When I look into my portfolio or potential investments now, I don't just pay attention to the dividend yield or the monthly income. I pay attention to metrics that I feel like are most important for low budget investors like myself. Total return, because when I checked mine, I realized that some of my high yielders were actually losing me money overall. Dividend CAGR, because if your company's only grown their dividend once every 5 years, then that's not growth, that's a red flag. And debt-to-free cash flow, because if what you're investing into can't pay off its debt, then how can it sustain growth? These metrics are just a few that make up the foundation of my Diamond Dividend series, where I break down how small, consistent investments into certain positions can create some serious long-term impact. That helped me think differently, not just as a long-term dividend investor, but as a low-budget wealth builder. But let's talk about results. Back in 2020, my first full year of investing, my dividends totaled $77.87. Fast forward to 2021, my dividends totaled around $331.32. And in just the first 9 months of this year, my dividends so far are at $294.10, putting me well on track to have my highest annual dividend payout ever. On top of that, my average monthly income has gone from $6.49 back in 2020 to about $32.68 this year so far. That is more than a 400% increase during that time, all from just being consistent and refining my approach. Honestly, seeing that number really shocked me because it just proved that small, consistent investing actually works. Yes, my dividend yield is lower, but the quality of the stocks and ETFs that I invested into now back then is a lot higher, and my long-term compounding potential is way better than it was before. So after 6 years, here's what I've learned. You can't shortcut sustainability. The biggest mistake that most new investors make is thinking that a higher dividend yield means more progress. But the real progress happens when you're actually investing in companies and ETFs that are growing with you. For me, I'm only 33 years old, which I'm sure a lot of you guys think that's pretty old, that's fine, but I still have some time on my side. So with that, that's inspired a lot of change in my portfolio, and the changes I've made are putting me in a better position for the next 10, 15 to 20 years from now. So whether you're investing $5 or $500, the principle remains exactly the same. Be consistent, be intentional, and make sure every dollar you invest today is building the future you want tomorrow. Even though I know I still have more work to do, I'm really proud of how my portfolio has performed so far, especially with last month when it comes to what I made in dividends and what the growth looked like. If you want to continue to see how I've been setting up my portfolio for even stronger dividend and share price growth, make sure you check out this video here where I go over how my portfolio in its entirety performed for the month of September. Hopefully you guys have time to watch this video. I appreciate you guys watching this one, and until next time, as always, take care.